Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Sentiment is Changing, because it seems like that bullish enthusiasm is dying out a little bit. Maybe that whole buy the dip kind of mentality is starting to change, and maybe we're going to start seeing a little bit more of that sell the rally type of thing. We'll see. All right, we're going to take a look at the Dow Industrials here, and this week focus on that. Take a look at the VIX, a couple other key indicators, and then I want to take a look at Ethereum and Bitcoin. All right, so on the screen you can see the weekly charts of the Dow, the S&P, and the NASDAQ composite. The Dow was down 320 points, S&P down 14, and the NASDAQ composite down 42. A lot more weakness as a lot of those tech stocks, as you've been hearing, watching TV, looking at the print, everybody's talking about how the tech stocks are getting hurt. Okay, so that's what's going on right now. Let's take a look at the Dow Industrials. Let's go back to this homepage. 2 weeks ago, when I kicked off the 2022 year, I walked through all four of the major indices, and I talked about the Dow, and I talked about how we have this expanding ending diagonal pattern. So that was right here, right? So this was the last data. We pushed a little bit higher the first couple of days, and then we've broken down in here. So I'm still looking for this to come back down. We've had a wave 1 down, a wave 2 pullback, a couple of interesting candles in here. You could look at this and say, well, this looks like a hammer type of candle. Same thing with the price action on Friday. But literally, what's really interesting, we almost took out Monday's low. I mean, we got within 1.5 points on the Dow of taking out Monday's low. So I'm not trusting these type of candles. I'm watching the wave count. We'll see what happens. The alternate count in here, first of all, before I move there, here's what I'm expecting. I'm expecting this path down here. And if this is a normal wave 3, I would expect a move down here at a minimum, most likely to challenge this December 1st low. Okay. Take a look at the alternate count I've got. The alternate count I talked about also was that instead of an expanding ending diagonal, that possibly we have a contracting ending diagonal. And if that's the case, we may still be in the fourth wave coming back down here. We may not be finished with it. So, continued movement to the downside could complete this. This would imply one more zigzag back up here for the fifth minute wave. And the fifth wave has to be shorter than the third wave. Now, that reminds me of something else. Let me go back to, this is my preferred count. This is what I'm working off with the members. Now, in terms of this wave count, in terms of this fifth wave, let's talk about that. It got very close in an expanding diagonal. The fifth wave needs to be longer than the third wave. Okay, the third wave is longer than the first, so it's not the shortest, which is a rule. You can never have the third wave be the shortest in an impulse, in a motive type of construction. Okay, so right now we got really, really close. I think we got within like 5 or 6 points of the fifth wave being longer than the third wave. But what I did like about this pattern is that the fifth wave died out before it got to the trend line connecting the top of wave 1 and 3. And that is a classic, easy for me to say, a classic characteristic of an expanding ending diagonal pattern in here. It just comes up a little bit short and starts to roll over. So the expectation, if this is going to play out, is this is going to start to break down out of this trend line, break down out of this pattern, and head south. And we should get five waves to tell us that we've got the new direction in a bear mode. Okay, that's where we're at with the Dow Industrials. Let's take a look at a couple of the indicators. Let's look at the VIX. Okay, here's what's going on with the VIX. It was down 1.12 on Friday. So we made a thrust up. We had a good move on Thursday, and then we just reversed and came back down a little bit. But it's interesting. I do this trend line either Wednesday or Thursday after we saw these little peaks in here. And I thought, okay, well, maybe we're going to turn and make a run for it. We got very, very close on Friday. We'll see if we continue to push. I think if we break this trend line, we could get a pretty solid burst to the upside like what we got here in November. So that would coincide with a pretty good dose of selling, which is exactly what we're looking for. So that's the picture on the VIX right now. Let's take a look at the percent of stocks above their 200-day moving average in the S&P, the Nasdaq, and the New York Stock Exchange. Look at this on the S&P 500. Here is where it peaked out on April 20th. Okay. Well, you know the stock market has done nothing but continue to go higher on this incredible weakness from this peak that occurred back here in April. Now that's the S&P. And where are we sitting? Look what happened on Friday. Pretty good little breakdown, actually, sitting at 66%. So we're still above that 50 level, okay, 66%. But I tracked the 10-day moving average on the 21-day on here also. And it's interesting that when it does cross to the downside, we seem to get another leg down, another push. We're getting very close to that happening right now. And this is the lowest close since back over here on December 22nd in terms of the reading. Now let's take a look at the New York Stock Exchange. Look at this picture. It's even worse. Now this peaked out on February 10th. Okay, so a lot earlier. I just said the S&P was in April. And look at this picture. So a lot more negative, and we're sitting at 52%. And when you go to the NASDAQ, of course, it's going to be even worse. Same day, exact day that it was the high over here as on the New York Stock Exchange. But I found kind of interesting that the NASDAQ, peaked on that same day here with this indicator. And we've already got a little bit of that moving average cross to the downside, and it is below 50%. It's been struggling. It's been kind of, coming up. It got below 50% back here in November, and we've been bouncing up to it, come down, bouncing up to it. Now it looks like we're getting a lot more weakness. We're sitting at about 46% of the stocks on the NASDAQ Stock Exchange are above their 200-day moving average. 46% are above. That's it. Okay, so that's the picture there on that indicator. Let's take a look. Oh, I have one other thing I want to show you. I want to look at the put to call ratios. All right, let me pull that up. So here's what I track: the equity put to call from the Chicago Board of Options Exchange. This is equity only, okay? So it's just on the stocks. It doesn't include the indices. Now, this is the actual readings, daily readings. This is the 10-day moving average. Now, I color code this in here for extreme. On the daily, I'm only doing two colors, really. I'm doing when the daily gets into the below 0.45, and what does that mean? It means 45 puts for every 100 calls. So like right here, what was the reading on Friday? 66 puts for every 100 calls. The 10-day moving average is at 53 puts for every 100 calls, 0.53. When it gets below 0.45, I color it dark red. When it gets into the 30s, I color it purple. Okay, so it gives me an idea of the extreme readings that are going on in terms of the sentiment coming out of the options exchange. Now, on the 10-day moving average, a little bit different. I'm showing a little more color. When it gets into the upper 40s, it's a brighter red. When it gets in the 50s, into the from 0.50 to 0.55, it's in yellow. Okay, so it kind of gives me a perspective. Now, the interesting thing about this is look at right here. Here's January 3rd. Here's all the trading in January right here. Not much of an extreme in sentiment readings at all. Okay, and what happened this is when the Dow and the S&P 500 pushed to new intraday highs. Okay, and if you go back and look at some of the other peaks that happened, look at November. Look at the sentiment that occurred back here in November as they were pushing. And you can look back here a little bit in September, but then go back to June, even more extreme. And then you go back to January and even more extreme. And what was happening in January into February? all the meme stocks peaking, you know, the GameStop, all the SPACs going crazy. Everything was happening. The investor, trading sentiment was over the top extreme. And it's reflected right here in the sentiment coming out of the put to call ratios from the CBOE. Okay, so you can just see that as the market continued to go trend higher during the year, the sentiment started dying off. And then as we pushed to new highs here at the first of the year, there was really a big lack of enthusiasm. Okay, so that's the picture of what's going on there. Let's take a look at those cryptocurrencies. Okay, I'm going to start off with Ethereum, ETHE, the Grayscale Ethereum ETF. It was, let me see, it was up just a little bit on Friday, up 36 cents, up 78 cents for the week. We're getting quite a bit of a correction in here. Now, when I look at the weekly chart, my best take on this is that we're doing some kind of leading diagonal pattern here for a wave one, and I'm labeling it primary wave one. Okay, now this does not take into consideration, look at January. Bitcoin's been trading since, I'm not Bitcoin. Ethereum's been trading since a couple of years before this, I believe. I think it was like 2017, something like that. And so really, this is all I've got to work with when I'm looking at ETHE. Okay, so this is my best take coming off this low here in September 2019. And right now, we've been doing nothing but pulling back, extreme weakness. And, if you talk about a corrective move of this entire move, right now, 38% is just like right here. And yeah, I've got this on log scale because of the depth of the scale, because it's so big. Otherwise, let me just take it off and you'll see, it doesn't put anything in proportion in here in terms of the movement. You get a much better picture when you put it on semi-log, and of course then I need to readjust the picture. And I call it semi-log because you got a log here and then you got the time scale that's even arithmetic down below. Okay, so here's what we're looking at. I think we got a pretty good chance of coming down even deeper in here. I'm looking at a wave 2 pullback, maybe to where this dotted line is, which would be where this wave 4 ended, the middle of all this congestion, which I believe is a triangle B wave in here. And then when you have a leading diagonal pattern, the impulse waves 1, 3, and 5 can be zigzags in a leading diagonal, and definitely 2 and 4 are zigzags, and yes, they overlap. So that's the picture. When I saw all this overlap going on, it's like, okay, this can't be a regular impulse picture. Something else is going on. This is my best take. Let's take a look at GBTC. Let me pull that up. It was down 21 cents for the week. Now, I'm counting this as a little more bullish impulse type of pattern here, like this. But if this is truly in a third wave, a third cycle wave, a third, well, we've got third primary wave right here. Wave 4, I don't think's done. Based on all of this type of price action, I think we're doing a big combined WXY, combining two corrective patterns in here. So I'm looking for a little more downdraft coming here in wave C. Now, if we come down and overlap this wave 1, then something else is going on. But right now, we tried to hold a really bullish scenario, and it just wouldn't hold. I really was looking for this to keep thrusting higher, and it just started breaking down, and especially when it broke this trend line, it's like, okay, this to me is the best take I've got on what's happening with GBTC and Bitcoin. So we'll see how this plays out. Let's see on the daily, and it doesn't really help you a whole lot more. I mean, this is the direction, and you can see the price action that's been happening. It was just, it didn't move very much on Friday, down or up 3 cents at the close. Okay, that is the picture on Bitcoin and Ethereum. as of right now. We'll see what happens. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great weekend. Remember, the market's closed on Monday for Martin Luther King holiday here in the United States. Have a great weekend.